I knew, I had a hard time getting people to buy actual gold. Like, I thought, are they going to try to get them to buy this? If they don't even want to buy the real thing. But when it initially popped up to 1,000 and it had a run and it went, and then it pulled back to two or 300 or 400, it was there for a while. I actually thought about buying it then because I was like, I can't believe that people are buying it, right? But what kept me from buying it for $300 or $400 was the fact that I didn't buy it at $2. Like I couldn't say, how am I going to buy it now when I didn't want to buy it when it was so cheap? And
That's kind
never
of,
really thought about
yeah.
$100,000.
The market keeps rewarding momentum, but the bigger question is whether price alone can replace substance. A late entry into a popular trade can still feel uncomfortable when the original thesis never made sense. That contrast matters because investors often mistake the endurance of a narrative for the asset's lasting durability today. Peter Schiff, a prominent economist, financial commentator, and longtime advocate of sound money, argues that Bitcoin's rise should be viewed less as proof of value and more as evidence of speculative excess. His emphasis remains on physical gold and silver, especially in an environment where inflation has pushed real interest rates lower despite nominal rate hikes. The sharper warning is that Bitcoin may have already peaked while forced buying from major corporate holders becomes harder to sustain. If share issuance no longer supports fresh purchases, the same structure that once lifted the asset could turn into selling pressure. By contrast, falling real rates, persistent inflation, and a loss of confidence in paper assets create a more convincing case for precious metals than for another speculative chase. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
The Fed follows through with 2 or 3 quarter point rate hikes between now and the end of the year. Even though the market didn't anticipate that when the year began, the inflation is going to be so much higher than what the markets anticipated that real rates are actually going to be a lot lower than the market was prepared for because the Fed needs to move a lot more than that. In fact, real rates have already crashed because the Fed has done nothing and inflation has moved up substantially. And that's bullish for gold and silver. Nominal rates are not what the key is. It's real rates. That's
Right.
what counts. And if real rates have collapsed, that is a powerful incentive to buy gold and silver. I think in general, when you get big moves up in the precious metals, silver would outperform, especially given the relative price now. I mean, silver is not as ridiculously cheap as when it was 100 to 1.
Right.
But silver did break out through massive overhead resistance that really started from 1980 and then was retested around 2011, just below 50. And when silver finally took that out after having languishing, in the 20s or low 30s for years, as gold kept rising, silver did nothing. Silver finally broke out and then overshot. It went all the way up to above 120. It's pulled back, but it's not pulling back to 50. It's pulling back to the low 60s. So we had a massive breakout. We had a pullback, but we're still above the old highs. And to me, it's a very bullish pattern in the long-term silver chart. And I think that this is a real new bull market. Yes, when it started, there was a big rush and, we overshot, but now we've pulled back and consolidated and we're getting ready for another big rally where that 120 high from, I think it was February, that's not going to be that much overhead resistance. I think we're going to take that out and we're going to go much higher. And even if silver were to pull back more, I'm just not sure that the market's going to give people the chance to buy
Right.
it
Yeah, I'm not saying it
down there
would, but
again.
even if it did.
Yeah, I have a feeling that, if you missed it before when it was under 50, you're not going to get a chance to buy 50. I think 60 is more likely around the lows. But yeah, I could be wrong. But it looks like gold is also bottoming out around 4,000. It's got a lot of support around 4,100, 4,000 to 4,100. So if gold holds 4,000, I would expect silver to be holding 60. But yeah, if gold has a more meaningful correction too, then maybe silver will have a bigger pullback. But it's already had a substantial pullback from the high. I knew, I had a hard time getting people to buy actual gold. Like I thought, are they going to try to get them to buy this? If they don't even want to buy the real thing. But when it initially popped up to 1,000 and it had a run and it went, and then it pulled back to 200 or 300 or 400, it was there for a while. I actually thought about buying it then because I was like, I can't believe that people are buying it, right? But what kept me from buying it for $300 or $400 was the fact that I didn't buy it at $2. Like I couldn't say, how am I going to buy it now when I didn't want to buy it when it was so cheap? And
that's
never really thought about $100,000.
Yeah, that's kind of like the same thing to me.
How big it was going to get. But yes, look, I regret not buying it for $1 or 50 cents, wherever, not buying it for 200 or 300. But, obviously I wasn't going to pay 20,000, 30,000, 40,000 for Bitcoin, even though it went higher. I still think that I did better on other things. I've done better, over the last 5 years. Bitcoin is lower than it was in April of 2020, of 2021. Yet almost everything I own has gone way up since April of 2021. So I over the last 4 or 5 years, I've done a lot better off not being in Bitcoin. But sure, had I bought Bitcoin early on, that would have beat everything that I owned at that time. But yeah, I underestimated the gullibility of the public to fall for this.
Yeah,
but I think the bubble has popped. Bitcoin has made its high, and I think the whole house of cards that Michael Saylor erected with strategy is falling apart right now. And I think this is going to be a major problem for Bitcoin because the biggest buyer of Bitcoin is going to become a big seller. Right now, they're still buying, but they're buying by sacrificing the common stockholders. Every time strategy now sells shares to buy Bitcoin, shareholders actually end up with fewer Bitcoin per share than before the purchase because he has to sell his shares at a discount in order to free up the cash. He should be selling Bitcoin and buying back the shares. That's what would increase the Bitcoin per share, but that would destroy the price of Bitcoin. So he can't do it. So he's trapped in a situation that is going to blow up his own company. And at some point, he's going to have to stop. The discount's going to be so big that he can't keep selling stock. What if the discount is 50% or 60%? How do you justify continuing to sell highly discounted stock? So at some point, all the Bitcoin buying has got to stop, but he's got to keep making these payments to the preferreds unless he wants to cancel them, which is going to be another catastrophe. So he's got no way out of this thing. He's in a worse situation than Trump got himself into with Iran. And, Trump surrendered and claimed victory, but there's no way that Saylor could do that. Plus, the reason the government wanted to get everybody's gold and silver is because it wanted to devalue the dollar. So when everybody turned in their gold and silver, and not everybody turned their gold and silver in, a lot of people just kept it.
Right.
And they didn't get punished. The government didn't send FBI agents going door to door, like looking for gold and silver and then arresting people that didn't turn it in. I mean, it was kind of like you turn it in to be a patriot. That was kind of like, hey, be a patriotic American. We need to do this to get out of the depression. Like somehow people owning gold was the reason we were in a depression. But what happened was people turned in their gold and the government gave them $20 an ounce. And then after the period to turn in your gold was over, the government said, okay, thank you. All the gold that we just gave you $20 an ounce for, it's now worth $35. Right? So the government needed to take the gold before it could revalue and devalue the dollar that they were paying for the gold. But we're not on the gold standard anymore. The government doesn't need to devalue gold. They can just print all the money it wants. So it doesn't have to take our gold. They could just print more money and spend that. But as I said, also, gold is hard to find too. So if the government says, okay, everybody turn in your gold, I don't think many of my customers are going to do it. Knowing my customers, they're not going to, look, marijuana is not as illegal right now, but but there's a lot of drugs. Let's say heroin is illegal. If the government says, okay, heroin addicts, turn in your heroin, which they should be doing anyway, because they're not even supposed to have it, they're not going to do it. Keep it. People violate drug laws. There's a lot of people that have guns that are illegal. They're not turning them in. So I don't think people, even law-abiding people who legally possess gold, if the government passes a law illegally that says you can't keep your gold, you got to turn it into us, I think most people are going to say, this is exactly why I have my gold. Things are really about to hit the fan.
Right.
There's no way I'm turning this gold in.
Silver carries the strongest upside setup because its breakout changed the long-term chart. After years of resistance near the old highs from 1980 and 2011, the move above that zone signaled more than a temporary rally. The pullback into the low 60s dollars still leaves prices above the former ceiling, making the consolidation look constructive rather than broken. Gold holding the $4,000 to $4,100 area would strengthen that view. If that floor remains intact, silver may not revisit $50, and the next major test could be a move back through the previous $120 high. The practical lesson is that waiting for perfect prices can become its own mistake. When a bull market matures, the market often stops offering the entries that looked obvious in hindsight. Patience is valuable, but hesitation can be costly when structure turns decisively upward again. Now, let's get back to the interview.
De-dollarization is a trend that's going to grow and gain traction. I mean, one of the main drivers of the gold price when it moved from 3,000 to 5,000 was central bank buying, and that's part of de-dollarization. They're moving dollars into gold. In fact, gold now has replaced the U.S. Treasuries as the largest reserve asset on the balance sheet of central banks. So that's going to continue. And that's taking out a large buyer that the U.S. government relied on for funding the debt. Other large buyers were the Social Security trust funds, Medicare, and they're now net sellers, and they have been for some time. So government trust funds are selling treasuries, foreign central banks are selling treasuries, and the Fed has not been buying that many treasuries like when it was, doing a bigger QE program. So there really isn't, enough demand for the debt. That's why I'm confident that Warsh is going to end up ramping up the QE program, expanding the balance sheet, keeping rates low, because the Fed is going to be monetizing all this debt where there's no private buyers. The Fed's going to be the buyer. Now, that's a mistake. It shouldn't do that, but it will, because if it doesn't do that, then we're going to have a financial crisis, and it's going to be worse than 2008, which is why, it's not going to happen. Governments have an incentive for the gold and silver price to stay low, but clearly they didn't stay low. They moved up. Now, you can argue they might have moved up more if it wasn't for active suppression. It's hard to say. But, the markets, I think, misprice a lot of assets. I mean, in many cases, assets are overpriced. I mean, look at now at a lot of tech stocks and look at cryptocurrencies. I think the market is assigning valuations that are devoid from reality, but there's a lot of speculation, and the public wants to buy these assets, and so that drives up the price. And I think a lot of the reason that gold and silver are still so cheap is for the same reason, only the opposite direction. I think the investing public doesn't perceive the real value of gold and silver. They don't perceive the threat, the actual threat of inflation and how grave it is. And I think that's going to change. I think you're going to have more demand coming from private investors, both the retail and institutions, as they start to appreciate the gravity of the situation, that everything isn't rosy the way they like to pretend, that we are on the precipice of a monetary crisis, of a sovereign debt crisis. And that's going to fuel incredible demand into precious metals that we haven't seen probably since the 70s. And when that demand returns, then you're going to see a big increase in price. And so I think it's more that lack of understanding that is why gold and silver are so cheap, not an active conspiracy to suppress the price, but just, widespread ignorance on the part of people who should be buying gold and silver who are not. And there's a gold angle. When my bank was seized, we owned about 12,000 ounces of gold and about 250, 300,000 ounces of silver for customers mostly. Some was owned by the bank, mostly by customers. And we transferred the gold and silver to another entity that was supposed to custody it for them. And then the entity, basically, Kenta, tried to basically steal all the appreciation. They wanted to keep, because 3 years later, when silver was, $30 or $40 and gold was $3,000 or $4,000, they said, you know what? We don't want to do this deal anymore. We're just going to give the bank back the value of the gold and silver when we got it. And we're going to keep all the appreciation for ourselves. So then this private company tried to screw over all my customers. But can you imagine if the government hadn't screwed me up? We were encouraging our customers to hold their deposits in gold and silver. And a lot of them had deposits in gold and silver. And now they're going to get their money back in paper. And they're not even going to get the real value. I'm still hoping they're going to get the silver, but we'll see. But the gold, the opportunity to get that has already been screwed up. They have to file lawsuits against this company to get the full value of their gold. But so the government, we really screwed up people. In fact, one of my customers committed suicide a couple of years ago because of the financial hardship of having his life savings in the bank. And there are a lot of other people that have written me about the difficulties that they're having because they haven't been able to get their money.
Mm-hmm.
But that's not my fault. That's the government. We didn't do anything wrong. All the bad actors, other than this Kinta company that came in, as a vulture after the fact, but all of the bad actors that resulted in the bank being in this position were government officials or journalists. I could throw the journalists in there, Matthew Goodson from the New York Times and the guys from that I sued and I won the defamation lawsuit, Nick McKenzie, Charlie Grieve from The Age in Australia. They're also the bad actors. But this is basically the government and the media working together to spread propaganda, fake news,
right,
that benefits a political agenda. I think capital controls are probably more likely than confiscation. Confiscation is a lot more difficult. And if the government is going to confiscate gold, they may confiscate stocks. They may confiscate real estate. Who the hell knows? They start confiscating property. I heard Senator Adam Schiff the other day was talking about how great it would be if we can confiscate $1 trillion from Elon Musk and redistribute it to everybody else. So confiscation is something they're talking about anyway. But I don't know that the risk is confined to gold or silver. But I don't know how to put probability on it. Of course, it's illegal to do that. But the government does a lot of things that are illegal, right? That doesn't seem to stop them. I think we're going to have a dollar crisis. I think we're going to have a bond crisis over that time period. The numbers are just too big. The bubbles are too big. I don't think there's enough road left to kick this can, and the can's too heavy, to be honest, at this point. They're going to break their toe trying to kick this thing. So we're going to have a crisis, and people should be prepared. What's his name? Hank Paulson, a couple months ago, said that the U.S. has to have an emergency break the glass plan to deal with a debt crisis. He didn't say we should act now to prevent the debt crisis. We should start cutting spending and kind of reinstilling confidence among our creditors. No, he just said the crisis is inevitable, so let's prepare for it. Or not prepare for it. Let's just figure out what we're going to do when it happens. Well, given that the crisis is inevitable, then the best thing that individuals can do is actually prepare. Don't wait, for the crisis and then, try to do something. Then it's too late. It's too late to break the glass when there is a crisis. What you need to do is prepare yourself now for an inevitable crisis that even the government or some people that were in government recognize is inevitable and don't even want to even think about preventing, because trying to prevent the crisis in and of itself causes a crisis. It just causes the crisis sooner. And all the politicians, when given a choice between a really bad crisis now or an even worse crisis later, they're going to take the even worse crisis later. But individuals need to prepare. So, own your gold and silver and get the right portfolio.
The larger pressure point is de-dollarization. Central banks have been shifting reserves from dollars and treasuries into gold, reducing a source of demand the U.S. government long relied on to finance its debt. At the same time, government trust funds and foreign buyers are no longer dependable absorbers of new issuance. That leaves the Federal Reserve as the likely buyer of last resort. This is also why the gold move is tied to balance sheet stress, not only to ordinary inflation headlines or short-term trading fear. The signal is institutional, not merely emotional. If private demand for treasuries is not enough, the forecast is more balance sheet expansion, renewed QE, and policy choices designed to suppress rates rather than restore discipline. That may postpone a 2008-style crisis, but it risks a deeper dollar and bond crisis later. When investors finally recognize the scale of inflation and sovereign debt risk, private demand for gold and silver could accelerate sharply, possibly resembling the 1970s. Capital controls may be more likely than outright confiscation. But the broader message remains the same. Protection has to be put in place before panic makes good options scarce. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.